Hello. Welcome back to the channel. I hope you are doing well today and I hope you are having a fantastic day so far. So in this video, we're going to be talking about the minimum credit score you need to buy a house. And this could be your first home, your second home, or even your dream home. Or maybe you're trying to get in the investment game and you're trying to buy your first property, your first investment property. We're going to be talking about the minimum credit score you need to buy a house. So be sure to watch till the very end. But before we dive in, if this is your first time stopping by this channel, welcome. Consider subscribing now to join this amazing community to stay informed on the latest helpful and exclusive tips for your financial wellness and success. And one more thing, give this video a thumbs up to help other people find this information quicker. Thank you. Let's jump right into it. So the very first thing that we have here is a question for you. And this question is your credit score high enough? Now, this is what millions of people are wondering. So a lot of people are out there, especially millennials, trying to buy their first home. They're asking, is my credit score high enough for me to get in this deal? What exactly do I need credit score wise to get in this deal? We're going to have answers to this by the end of this video, so be sure to hang on till the very end. The very next question is, can I buy a home with bad credit? So can you buy a home with bad credit? You don't have to tell me yes or no, but just think about this as you watch the video. This is another question that millions of people are wondering right now, if they can buy a home with bad credit. And we're going to talk about this. So before you leave this video, the goal is for you to have the answer to this question if this applies to your situation. The very next question I have on here for you is, what is your credit score? And I'm not saying tell me your credit score, put it in the comment section below. No, I'm just saying, what exactly does a credit score mean? We're going to talk about that right here, right now. So let's unpack this for a second. So what is your credit score? Think about your credit score like an assessment report. So those 3 digits, your FICO credit score, is nothing but an assessment of how well you use credit or how bad you use credit. So that's what your credit score is. So this is what lenders and banks use to gauge your credit habits. So your credit habit is very important if you are trying to apply for a mortgage. In fact, your credit score impacts the type of lifestyle you have. It goes from the type of job you have, because some jobs look at your credit before they even hire you. And then it comes into play when you're going out to get insurance, right? So when you're trying to apply for insurance, it impacts how much you pay for insurance. So many things we can go on and on so many areas where your credit score impacts you. So your credit score is highly important. So we're going to be talking about how this applies when you're trying to buy a house, right? So the very next thing I want you to understand is the credit score metrics. So basically, what parameters do they look at, or do credit agencies look at when they try to report your credit score? This is very important, so be sure to pay close attention to this. Now, the very first thing they look at is your payment history, and your payment history accounts for 35%. So this is more than a third of your credit score. So if you can just do the bare minimum and pay off your credit card balances, you're going to be in a great shape. 35% is a lot. So you want to make sure this is the low-hanging fruit right here. Pay off your credit card. So your payment history. So how well or how quickly, or do you have a lot of carryovers, or do you just let your debt pile up and never pay it up? So this impacts your credit score. And the next thing we have on here is the amount you owe. So this is 30%. So how much debt do you owe? And this comes into play if you just have a bunch of debt. So that's another quick way to reduce or to increase and boost your credit score. You want to basically reduce the amount of money you owe. So this accounts for 30%, still high. So between how well or how quickly you pay off your debt and how much you owe, that's 65% right there. Now, the very next thing that impacts your credit score is the length of credit history. Now, this is something that most people cannot control, especially if you just got a new credit card, if you just got into building your credit. This is something that you just have. It takes patience right here. It takes a few years to build your credit. I recall when I just got my credit card, I was just worried. How exactly? This was years ago. I was just wondering, like, man, this needs to just ramp up. I need to get an A in this category, but this is something that takes time to build that credit history. So it accounts for 15%. So even if you don't do so well in this area, the other areas are very critical for you to keep up with. Now, the very next thing is the type of credit. Let me explain this for a second. So this is some people call this the credit mix, right? So let's just say you have car payments, you have student loans, you have medical debt, you have mortgage, all that kind of stuff, right? So this is the mix, how your credit is mixed, and this accounts for 10% of your credit score. So now the very last thing that I have on here, or that we have on here when it comes to the metrics for your credit score, is new credit. So those who are going out there to the department stores or whichever store you go out to, and you keep applying for all these credit cards from these department stores when you go out shopping, this has a huge effect on your credit, because every time they try to get you approved for a new credit card, they have to pull your credit, and this new credit impacts your credit score. But it's just 10%, but just something to pay attention to. Now, the next question here is, how is your credit score ranked? This is just something that a lot of people are wondering. Like, remember, I did say, where do you stand with your credit score? Is your credit score high enough? So for those who are curious, we're going to talk about how your credit score is ranked and where you stand in the credit hierarchy. So this is exactly, I'm going to go top down. So when it comes to credit, right, this is something that most credit bureaus use. But when it comes to your FICO credit score, if your credit score falls between 800 and 850, that is considered exceptional or excellent credit. Now, if your credit score falls between 740 and 799, that basically means that you have very good credit. And at this very band, you don't have to have exceptional credit to get the best rates. If you fall if you fall within 740 and above, you're likely going to get the best interest rates out there. And something very important to note too about credit score is your credit score impacts the type of interest rate you get. How much interest rate do you get? So this is something to pay attention to, because the interest rate, the amount of interest rate you pay, will determine how much money you have left over in your pocket or your bank account. Now, when it comes to the next ranking here, so you have the good credit. So good credit from a FICO scoring level falls between 670 to 739. So that's considered good credit. Now, fair credit is just people who are still coming up. Maybe you had a slump and you're just coming back up trying to build your credit. That's 580 to 699, 669. So if you fall between within this band, that is considered fair credit. Now, what about poor credit? These are people who are very challenged, and most lenders will not even look at you. So this is the poor credit category, and this is 300 to 579. So if you fall within this, you basically want to use the link in the description section. Reach out to me within this if you fall within the poor credit or the fair credit and you're trying to build up. Again, now real quick here is why your credit score matters. We've talked about why your credit score matters briefly, but again, just to highlight it, your credit score matters because your credit score is used to determine your interest rate. This is what lenders use to predict how reliable you are with your debt. So this matters a lot, and this will determine how much monthly payments you have to come up with for your mortgage. So something to pay close attention to. Now, the next thing I want to talk about here is, what credit score do you need? So that's the whole reason why we came to this video, right? What credit score do you need to buy a house this year or whenever? You know, if it's your first home, your second home, what credit score do you need? So your credit score, the short answer is it depends, and the long answer is it depends on the type of loan you are applying for. So the minimum credit score you need will depend on the mortgage loan type. And what exactly do we mean by this? We're going to talk about the very types of mortgage loans and the minimum credit score you require for these mortgage loan types. So the very first one we have here is a conventional loan. So the conventional loan is what everyone is used to. This is the typical loan. You go out to the banks and you get a conforming loan, right? So for this conventional loan, the minimum credit score you need is 620. So 620, if you have a credit score of 620, most conventional lenders will, reach out to you, and you may not get the best rates, but the minimum you need is 620 for a conventional loan. Okay, so the very next one we have here is an FHA loan. So an FHA loan is a loan that helps many people. So this is a federal backed loan, right? So with the 3.5% down payment on the FHA, the minimum credit score you need is 580. So the FHA loan is good for people with fair credit. So if you have fair credit and low down payments, you're going to get around 580, need 580 credit score to get the FHA loan with 3.5% down payment. Now you have the FHA loan with 10% down payment. So if this is the loan type that you are going for, the minimum credit score you need is 500. Even though they say 500, most lenders will not give you the loan unless you have up to 580. Just something to keep in mind, right? But you do want to make sure you understand that 500 is the federal requirement for the minimum credit score with an FHA loan and 10% down payment. Now, what about the USDA loan? So the USDA loan is a rural loan. So for those who don't understand the USDA loan, you can go look it up. If I talk about it here, it's going to make this video so long. But the USDA loan, if you have the USDA loan, the minimum down payment credit score that you are required to come up with or to have is 640. So if you want to get the most competitive rates, you have to go higher in your credit, but the minimum is 640. Now, what about a jumbo loan? So what is a jumbo loan? A jumbo loan typically is for more expensive houses, right? So let's just say that you do have a home that the loan, I think in 2021 the loan amount basically is over 500,000. I'm not sure what the exact number is, but I do want to say around 510,000 plus. So if your loan amount exceeds this, it falls under the jumbo loan category. So if you do have a jumbo loan, the minimum credit score that you do have to come up with or you need to have is 680 in order for you to get the jumbo loan. And the higher credit score you have, the better for you, the better interest rates you get. So now that you understand the loan types and all that, what else do lenders look at? So real quick, lenders are going to look at your loan amount, your cash reserves, your down payment amount, your debt burden, your debt to income ratio. And then they're also going to look at your income and your employment history. So these are some of the key things that lenders look at outside of your credit score when you're trying to buy a home or a house or an investment property. Now, can you get a loan with bad credit? This is the big question. Now that you understand the loan types, the minimum, I think you kind of know what kind of loan fits into your category or what loan fits into your situation depending on your credit score. Like I did mention, your best bet may be the FHA loan with the 3.5% down payment or the FHA loan with the 10% down payment. But what if you have bad credit and you just don't want to go for the FHA loans? What can you do? So most lenders will require you to have two things, and the two things that most lenders will require you to have include: one, a higher interest rate. So most lenders are going to give you a higher interest rate if you have bad credit, period. So this is just the penalty you pay for having a bad credit. So that's what you get, and this is what most lenders will do if you still want to proceed with the loan and not build up your credit score. Now, the next thing we have here is a larger down payment. So most lenders are going to need you to put down a larger down payment, and this just means that it basically gives them less exposure. Since you don't have a high credit score, they cannot necessarily determine how well you use credit, or maybe they see that you have a bad credit, they're going to require you to put down more money to get the mortgage. Now that you understand the things that the lenders will need from you if you have bad credit, a very important question is, what is the best way to increase your credit score? So if you're looking to increase your credit score or basically improve your credit limits, be sure to check out this video right here. So there's a video right here that I'm going to share with you. Be sure to check out this video if you're looking to boost your credit score or improve your credit limits. So this video goes through exclusive tips and helps you boost your credit score pretty quickly. And also, if you're looking to make some extra money during this period, be sure to check out the video on the left. Stay safe, see you in the next video, and thank you for watching.